What's going on? This is your faithful community realtor. Hey, I have some valuable information for you today. I also want to say happy holidays to you and yours if I don't see or speak to you. But I've been holding off on this information for so long, just super busy trying to get things in order. And I have it now today. All right. It is part of the 10 faithful secrets to purchasing a primary home, primary residence, or a investment property. So the first question is, what is a primary home? What does that consider? And just to break things down in lame terms, a primary home is a dwelling, a place where you are at for majority of the year or most of the time, right? This can be a townhome, it can be a condo, and it can be a single family home. This is your primary residence where you stay at majority of the year. That being said, it has some benefits to it, right? When you set a primary home, one of them is some tax cuts. The next thing is better mortgage rates because it is your primary home. The next question or the next thing would be, what is a secondary home or investment property? This can be a secondary home, third home, all the above, but it's some factors that go into it where you may not get a good interest rate on it. You may not get certain benefits on it because basically you are building some type of revenue for yourself, right? Or profit for yourself. So of course they want to control that, right? So it's an investment property. You got a primary home. Investment property is the opposite of a primary home. You're not planning on spending your time there throughout the whole year. You're probably not really planning on spending a lot of time there, but you will probably occupy it or have someone occupy that secondary home or investment property. You're using it as a business. So when you're using it as a business, you got some tax regulations and some government stuff there that you really want to be able to learn about and basically ascertain, the information that you need to actually benefit off of a secondary home. I have another thing here is, what is a mortgage? A mortgage, a lot of people think they know exactly what it is, and I'm pretty sure you guys know. A mortgage is just basically a loan that you receive from a lender. It's a promissory thing that you will say, hey, if you allow me to get these funds from you, borrow these funds from you, then I will pay you back. Whether that's in 15 years, whether that's in 30 years, whether that's, you may do an arm and pay them back in 6 to 10 years. I don't know. So it depends on what you and the lender decide or what you qualify for. And you can refuse not to get it. I mean, you can, or they can refuse not to give it to you. You don't necessarily have to take it, but this allows you to use someone else's funds to not only purchase a primary home, but also use funds to purchase a secondary home or investment property. And it's different terminologies, it's different situations when you're talking about one or the other. Primary, you may have some good things that can happen to you for a primary home. Secondary, you may have to fight a little harder to actually get those loans from the government because, again, you probably going to make some money off of this stuff, and the government is saying, hey, listen, we don't want you to make that much money, or there's just stipulations to it like any other type of business. It becomes a business to you. So the mortgage is basically what I have here, an agreement between you and the lender that allows you to borrow money to purchase or refinance a home, and it gives the lender a right to take it away if you fail to repay it. Remember that. So they will remove or take away that property if you fail or renege on your promise, right? You have a loan, a 30-year mortgage that you have to pay on it for 30 years. You can actually pay on it earlier than 30 years, but usually it takes people about that time to pay on it. And it allows you to not have a, crazy interest rate on your loan depending on how many years you go on that promissory or that, that commitment. The number one thing that I would love to talk to you about is number one on my list, to the 10 faithful secrets to purchasing a home. 10 faithful secrets to purchasing a primary home or investment property. And I have out of here just miscellaneous expenses, out-of-pocket money expenses. Out-of-pocket money expenses. Yes, when you go and you apply for a loan, you do have to put down a certain amount of money for the down payment. But let's skip that part. Let's talk about money. You have to go in your pocket right now and say, all right, let's pay for this. One of the things that you have to pay for when purchasing a property is an inspection. And this is a career opportunity for people too, because you have inspector out there or inspection companies out there that are hiring, and a lot of people don't think about actually going into that field. So pay attention to that. Do your research on that. I think it is a good field to be in. So inspection of the home. I got that as 1A. Inspection of the home is, hey, we don't put in this contract. We don't put in a bid to the seller, all the above. We don't sign the documents. And now it is our turn to actually get this house inspected. Inspection, and I'm not an inspector, but you get a 4-point inspection. 4-point inspection comes with 4 different things. Electrical, it comes with plumbing, it comes with other things too, and I don't want to get into that, but you also want to check certain things. Like in Naples, Florida, they want certain properties, they want wind mitigation and all the above. And I don't want to get into that because that's not my field, but they want these certain things so that the insurance will cover it, or the mortgages will allow you to get that mortgage on that property. So that's an inspection on the home. And if it doesn't pass inspection because certain things, you can always go back to the seller and say, hey, look at this. The piping is certain pipes that need to be fixed, right? Well, when you do that, they can say yay or nay, depending on the contract. And it's kind of going off of what I'm talking about, but depending on the contract, they can say, okay, we signed an as-is contract. As-is contract say, hey, you can come up with this stuff and tell us what's wrong with it, but you're going to buy it as is. Or you have most of the time sellers say, all right, we'll put a certain amount of money towards it, or we'll give you a concession saying that basically we're going to help you get it fixed. We're not necessarily going to get our people out here to fix it. Or in, great scenarios, you have individuals that say, hey, I have a person, they're, a licensed individual. They are a company with insurance backing, all the above, and they can come out and fix it for a low rate, and we'll take care of it as a seller. That's a great situation, right? I've had that happen to some of my clients before, and it's a great feeling. But it depends on, again, the contract that you actually sign. So pay attention to the contract when you purchasing a home. And I know most of you guys don't. There's several different contracts, depending on location, depending on a realtor, that, when you sign, it's saying this, and that, and those little small prints, right? Saying that you can't really get anything fixed, or saying that you have every right to have a washer and dryer. You have every right to, have the stove that's there, the things that are in the actual area or in the home. You have the right to those things. So pay attention to the contract you're signing. With the inspection, may come, the next thing is the appraisal. Now, the appraisal is a lot of things. People think they know what it is, but the mortgage lender usually bring in the appraiser to actually put that information of the loan and what the appraiser appraised the home for. And it's in some way, somehow it has to match, right? because the bank is going to say, hey, we gonna give you 200,000, but the property only worth a certain amount. Or we gonna give you 200,000 and the property is worth way more than what we giving you. We only giving you 200,000. And then that's the negotiation part between the buyer agent, the selling agent, and then also, it intertwines with the seller and the buyer. And that's just a situation where it comes with communication. So with this appraisal, they come out to the appraiser. That's another career opportunity also. You can be an appraiser where you go out and appraise these properties. And I'm not going to say it's easy, it's hard, I don't know, right? But you have individuals that comes out and they seem to be super busy, and it's an infield career, and it looks like it's fun, right? But it can make or break a deal too, depending on that person's profession, what they see, what they don't see, all the above. So as a realtor and as a, let's say, listing agent, you want to make sure you have all your documentations, all your comparable analysis, all the upgrades that you may have. And I'm going off the deep end again because that's the listing agent. When you're buying this property, your appraisal, you want your appraisal to come back appropriate, right? Or you want it to come back not too far off from the price. What was happening, and I had a few situations where the listing agent or the seller priced this home very high. And then when an appraisal came back, it was like $10,000 over what the appraisal was. So that becomes a negotiation situation, because now they have the opportunity to just basically say, well, we want the extra $10,000, or we want to stay in this deal and allow you to purchase this. We're going to honor the appraisal. And when they honor the appraisal, everybody stops sweating. It feels good. And then the deal tends to go on. So I talked about what is a primary home. The primary home is the dwelling where you are at majority of the year, right? Now, the opposite is, whether that's a boat, whether that's a townhome, condo, single family home, if you are there majority of the year, majority of the time, that is your primary home. Now, secondary home or investment property is the total opposite. You really don't plan on being there, or you're going to occupy it for a bit, or you're going to have someone else occupy that residence. I talked about mortgages. What is a mortgage? And that's just a promissory thing between you and a lender. And the lender allows you to actually get this loan, be approved for this loan, in hopes that you're going to pay them back, right? And if you don't pay them back, you will, get that home taken away from you. The next thing that we spoke about was, number one on the faithful secrets to purchasing a primary home or investment properties. And that's just having out-of-pocket, it's talked about the out-of-pocket expenses that you will need. One is for an inspection. You done a contract, you done put in a bid. Now you need to get the home inspected. When you get the home inspected, depending on the square footage of the house, determines exactly what that inspection company is going to charge you, between $400, $800, depending on how big the property is. You get the home inspected, it passes inspection, saying that everything is good, or some things come back. You go back to the negotiation table. You talk about, maybe you can fix this, maybe you can give us a credit on this. It goes back to the negotiation table. The next thing is the appraisal. I don't know exactly how much appraisals are or what is determined. The mortgage lender usually handles this part, and then they kind of bill you, or it's an expense. So with the appraisal, they come out, They say, hey, this property compared to this other property, compared to the units next to it, compared to the property that sold 3 months ago. Like, they do all the measurements and all the things that to get the appraisal for the property. They come back and say, this is what it appraised for, and this is our number. You do have some fight in that. I've never had to do that, but I've heard stories before that you can do certain things to try to debate the appraisal that came back, but I never had to do it before, so I won't speak on it. But that's the appraisal part. Those are the first two things I will love, where I spoke about that, I would love for you guys to actually, take notes and remember when purchasing a property. That is number one, inspection. Number one, appraisal. These are out-of-pocket expenses that you need to tap into immediately. Hey, this is your Faithful Community Realtor. It's been great. I hope this has been great information for you. Please share, like, all the above, and I'll talk to you soon.